I'm sure you know me already, but for the sake of pumping up a brand, I will say it again. I am Martin Jones, and because you are listening to me, Martin Jones, you know that you are listening to P2 Corporate Reporting. And very specifically, what I'm going to do now is look at the revision mock for P2 Corporate Reporting. I have a copy of it here on my left-hand side, which I suspect is just out of camera shot from your perspective. But just on my left-hand side, I have a copy of the revision mock. But before I do so, I just want to introduce the idea of a revision mock. The first thing is that a revision mock is not so much about checking your knowledge. It's about getting you in the groove for the grueling task of bashing out a P2 examination in 3 hours. It's all about 15 minutes of reading time and 3 hours of going crazy. And honestly, there really is limited value in the revision mock if you're just going to work it as a learning exercise. If you haven't already done the revision mock, then I suggest you turn off this recording, go and do the revision mock as a revision mock, as a 3 hour and 15 minute exercise. Really get the feel for what it feels like to try and hold your examination time within examination time. So that's what I want to say first of all. So I guess if you're still with me, and you're still listening to me, then you've already done the revision mock and you know what you've experienced. So can I talk a little bit now about, well, first of all, the 15 minutes of reading time. This revision mock is just a mock of the examination. It's past examination questions, hacked up and moved around and all that sort of stuff. Now, please, you've got 3 hours of writing time. So the way that you use those 3 hours of writing time is very much up to you. Please do use your 3 hours of writing time how works for you. But for most students, what they do is in the 15 minutes of reading time, they look at the B section, question 2, 3 and 4, and essentially they decide between question 2, 3 and 4, and particularly between question 2 and 3. To be frank with you, most students do question 4. In most sittings, in most years, most students do question 4. It tends to work for most people. Question 4 tends to be the easiest question for most students. So if you are that kind of student, probably the place to start is with question 4. And then you're going to decide within your 15 minutes of reading time which of the questions, question 2 and 3, to choose. Now, in this particular revision mock, I would suggest that probably question 4 is well worth having a go at. But if I'm really honest with you, neither question 2 nor question 3 is evil. I'm not saying either of them are nice, but neither of them are evil. Now, I think it is a little bit of a weakness in your current examiner, Graham Holt, in that sometimes the questions are a little bit uneven. One of the questions is definitely harder than the other. It's not something he means to do, it's just, the way things work out. Now, if that is the case, you don't want to be doing the harder question. Now, your reading time, I know it's tempting, you're obsessed by question 1, you want to get into the numbers and you want to read about the numbers. Resist the temptation, you have to do question 1 anyway. So don't spend your reading time in deciding what you're going to do in question 1, because you're going to do it anyway, and you don't want to be running over in question 1. P2 is about the B section, and it's so important that you make sure that you choose the question that is right for you. Now, Lord forbid that this would happen to you, but it does happen that students are partway through question 2, and then they think to themselves, why am I doing this? This is completely impossible. They're partway through question 2, and they're going, this is impossible. I should be doing question 3. I mean, that really is a catastrophe. And it was to prevent this, I'm partway through question 2, I should be doing question 3, that the ACCA introduced the reading time. So do use your reading time for the purpose for which it was intended, which is for choosing the questions and the order that you do them in. Like I say, the classic order would be 4, then 3, then 1, or for some students, 4, then 2, then 1. So hopefully you did that with your reading time. So moving on to, what should we do first? Moving on to the content of the questions themselves. Now, I have here the questions in front of me, but you have the questions and the answers in front of you. And I'm going to give you a 45-minute summary of the key issues that I wish to convey regarding this revision mock. This is not intended to be a regurgitation of the answer to these questions. This is intended to highlight some of the issues within the questions and hopefully get you, moving in the right direction with these questions. I think, to be frank with you, that the best way to work this is from back to front. Now, you will have done 3 of the 4 questions. You will have done question 1, of course, but you will have chosen from question 2, 3 and 4. You won't have done all 3 of them. Now, for obvious reasons, I am going to work through all 4 questions, and I think it's going to work best for me. I think it's going to work best for you if I do start at the back end, maybe to show you that that's a great way of doing the exam. So starting with question 4, which is a beautiful, real exam question, relatively recent as well, from Graham Holt, called High Quality. At least I call this question High Quality. Now, there's a little bit of an introduction, you might call it. It's hardly a scenario, but there's a little bit of an introduction followed by the requirements. And I want to have a detailed look at the requirements and give you a flavour of some of the ideas that you could convey. Explain why accounting standards are needed to help the market mechanism work effectively for the benefit of preparers and users of corporate reports. Now, really, these 9 marks they're all yours. They're absolutely all yours. So you can discuss this question in so many different ways. Some people like to go, really into who are the preparers and who are the users and what benefits they might get. For me, personally, the key phrase is market mechanism. Explain why accounting standards are needed to help the market mechanism work effectively. Now, if I can draw you into the relevant part of the introduction, you'll find out that this market mechanism being referred to is essentially the efficient market hypothesis, which is something that you would have learned from previous studies, for example, from F9. Now, whilst acknowledging the importance of high-quality corporate reporting, the recommendations to improve it are sometimes questioned on the basis that the marketplace for capital can determine the nature and quality of corporate reporting. It could be argued that additional accounting and disclosure standards would only distort a market mechanism that already works well and would add costs to the reporting mechanism with no apparent benefit. It could be said that accounting standards create costly and inefficient and unnecessary regulation. It could be argued that the increased disclosure reduces risks and offers a degree of protection to users. However, increased disclosure has several costs to the preparer of financial statements. What Graham is saying, what the examiner Graham Holt is saying, is that it could be argued that information flows efficiently already from the company to the market. Now, if it is true that information already flows from the market, the other way around, from the company to the market, if it is true that information flows efficiently from the company to the market automatically, then there is no need for financial reporting at all. It is true. If it is true that markets are efficient, then there's no need for standards, there's no need for financial reporting at all, because information just flows instantaneously from the company to the market. So if it is true that markets are efficient, we don't need standards. That is true. But the thing is, of course, markets are not efficient. And then you're going to show that markets are inefficient, whether you show, if you want to, and you're good at the efficient market hypothesis, you can go a little bit crazy, with your strong, semi-strong and your weak. But I wouldn't particularly recommend that. Just keep it, pull back a little bit and just say markets are often inefficient and then give examples.